Well, Yousef, thank you for being on my show today.
Thank you for having me.
I wanted to try and memorize your profile, but I didn't, and our audience will soon figure out why. But you are Yousef Hamza, and in your career, you've advised over 3,000 entrepreneurs, and you've helped them with legal advice, strategy, and fundraising. You've yourself invested in multiple startups, and you have a portfolio of successful SMEs in the region, and you manage funds for your own capital, your family, and other family offices. You are a mentor at Injaz and Dubai Plus Acumen. You're a global shaper under the World Economic Forum. You're an advisor, board member, and angel investor for a number of startups. You organize and fund a yearly business plan competition for social entrepreneurs, investing and advising in the top 3. And all of this is not even your day job, because you are the CEO of the V7 group, where you have your own fund, I believe 2 funds under V7 Capital. You run a law firm, an accounting and finance advisory firm, a digital management consultancy, and an incubator for startups. So I hope I've not missed out on anything, but
No.
looking at how much you've done, I probably have.
No, it about covers it. Although I think, for example, the Global Shapers, I'm now too old for that. They actually kicked me out as a result.
How do you get so much done?
I think it's really most about focus, the ability to genuinely focus. I typically switch off my phone or put it to the side, lock myself in a room, and will bat away at work, as well as learning to let go. I think that was one of my most difficult moments, to start handing over certain things to people and allowing them to do things, rather than wanting to manage everything myself.
So I take it then you can't be a perfectionist.
You cannot. People cannot be perfection. I mean, there are certain industries where you're allowed to be. A doctor should strive to be a perfectionist, etc. But you should aim to be as good as possible. But you cannot be a perfectionist and get so much done. There's no time.
So how did you get here? Can you tell us a little bit about your background and your journey so far?
Interestingly, I started as a lawyer, typical the Arab choices of doctor, lawyer, engineer. So I went for number 2. I joined law, practiced for a little bit of time, and then found that it wasn't really my calling. Having hung around family business while I was growing up, especially with my father, there was much more of a calling towards the business side of things. So I was more interested in the businesses themselves than the legal issues they were having. As a result, then I had to decide what to do. At the time, this is probably 12 years, 13 years ago, there was no such thing as angel investors. There's no such thing as really startups and incubators and mentorship. And it was all very ad hoc. And I think the trigger point for me was I was sitting with an uncle, and somebody random came through, knocked on the door, said, "Hi, I got your name from so-and-so. This is my name. Can I pitch my business to you?" No introduction, no email, no nothing. Walked in, sat down, horrible presentation. And at the time, my uncle wrote a check and said, "Well, here you go." I said, "What are you doing? How is this a process?" As a lawyer, I'm thinking, there are so many documents missing. There's so many things that have to happen. This is just the way we invest. So there was something that needed to change. And so I just decided, let's start from the ground up and hope it works out.
So from an investor's perspective, if they're looking at an opportunity, what are the legal aspects they should be thinking about, especially when they're investing in a new startup or an entrepreneur at their early stages?
We like to see, and no matter how small you are, even if you're a one-man band, we'd like to see that there is some kind of governing document, a shareholders agreement or otherwise, that will lay out the relationship, even if it's between yourself and yourself. I need to know that you have, and I can clearly see in mind what's going on. Typically people say, no, we're husband, wife, we're brother, sister, we know what's going on, we're in sync. You may be saying the same words, but thinking different things at all times. So basic governance documents are a must. And the higher up or the more complex a company gets, the more documentation you need. Typically, it's really more, the only thing about legal diligence is what you're saying real? Can you prove it? Do you have the contracts or the emails or the flow through to show that this is the case? And that's it, because the biggest fear as an investor is, and we've had this at times, is transfer the money to the bank account, and it has happened. More so in difficult economies, entrepreneur disappears. Or those contracts weren't real, and all of a sudden the revenue that was up here and growing takes a nosedive because it was inflated through something or the other that wasn't real.
Switching perspective, what should an entrepreneur be thinking about in order to protect themselves when taking on investors, and what can kind of go wrong there?
So investors typically aren't bad guys. They all want the same thing as you do. They want the success of the company. Where things get difficult is when the company, when you don't hit your targets consistently, and when the company itself starts to suffer. That's when questions are asked. First thing you have to consider is, or remember, is these people are on your side. So they may be hostile towards you, but they have a right. Don't start to retaliate with hostility as an individual, so prior to legal. Because legal is really the outcome of something has gone wrong here in the soup. And then the chefs argue, then legal. So in this argument phase here, you have to be level-headed, calm, and figure out ways with the investor. And they will always try and help you. If you go, well, this is what I'm doing, and you agreed with it, and it starts becoming messy, things start getting illegal.
Are all VCs looking for unicorns?
I mean, that's the dream.
What are your thoughts about this approach where the winner takes all? And is that a sustainable model? Or in our region, should we be looking at different models and different paths to exit, or maybe no exit at all and a path to profitability?
I don't exclusively invest in tech companies. There's a logic behind it. There's a history behind it in the US. But there's also 60, 70 years of history out in Silicon Valley. There is a very long-standing culture, history, the people. If you ever go there, you'll realize it's a different world. It's built for this. Therefore, the scattershot approach, having certain metrics in mind, and it becomes very clinical. It works. Does it work as well here? I don't know. I've yet to see all the numbers presented by a fund having opened and closed and where it goes. I couldn't personally do it. For me, it's far too risky. I would have sleepless nights, like just waiting, seeing losses everywhere and hoping one of them is going to go 10x to cover the other losses. I thankfully, in the 12 years, there's only been, of all the investments, one company that's failed.
So when you say failed, they might have run out of cash, but other companies have now exit or become profitable. But I haven't seen IPOs here yet.
No. I don't believe there's the landscape or the market for that here. People usually opt to IPO in London or in Sweden or wherever have you. I guess they do that for access to liquidity in those markets, and they feel those markets will bring credibility to the IPO. Whether that's the case or not, it's just the view of the...
Do you think that's going to be different 5 years from now, 10 years from now?
Things will change. You've seen Dubai. You see how things change. It's a bound and a leap, and then things will catch up. So they took the bound and the leap to open up the market. I think it will take time for that to develop. But of course, at some point, the public equity market here should pick up, and people should be IPOing through Dubai, if not in 5 years, 10, 15 years.
What key factors do you think need to change in the environment for it to be more conducive to companies having their IPOs?
I think both in terms of the liquidity and the ideas or the companies. I think there's some great companies, and we have them, go IPO on the local market, and you have that one success story, it will start to drive other companies. Similarly, if people start to invest through that and make money, it's a matter of, it's always the first step that's the hardest. And that first step just needs to really be pushed along.
So, you said you set targets for entrepreneurs when you're investing in them. How do you, because obviously in the initial stages, it's all about burning cash or hemorrhaging cash, or to put it nicely, investing for future growth. How do you draw the line, and what's, the right balance between growth and profitability?
I think that's down to the company and the sector. So in IT, you're a lot more about, again, burn rate and growth. There are the standard, your cash should last you this long. Start fundraising 2 months after your last fundraise, 3 months after your last fundraise. There are the standard metrics. We don't usually, as investors, come in and set that. We'll guide it and say, this is too short. You might cut this a bit too loose. You're expecting too much revenue. I like to presume that no revenue will come in for a while. How long can you survive for? So I like to be a bit more skeptical, because even if you are, you're still going to miss your targets.
So what kind of runway are you comfortable with?
I mean, for IT specifically, or for tech rather, it's 9 to 12 months. If they have 9 to 12 months, that's good. Other companies, I mean, it's a different model. I expect them to be aiming for profitability. Once they're profitable and stable, then go for growth. The typical old school business.
We're obviously operating here in the Middle East, which is an interesting circumstance. Globally, obviously, there are connotations about it not being as safe as other parts of the world. So when you make investments, or when investors make investments, is there a risk premium attached to how they calculate their expected returns?
If you're talking about external investors investing in, absolutely. I was very shocked to find that some of the most educated markets in Europe have very negative thoughts on the UAE still, despite all the education and despite all the outreach we have. So they're typically much more comfortable investing into one of their own people running a company in the UAE. So if it's somebody investing from Sweden, they'd like to know it's a Swedish CEO or a European CEO. They're much more comfortable investing into that rather than an Arab CEO. There's a lot of fear for absolutely no good reason, unfortunately.
So what do we need to do to actually create an environment that's vibrant for VCs and entrepreneurs, and so that entrepreneurs don't have to look west for financing?
Though the funding market here is starting to grow, and you can see through the likes of Magnet and other groups, the numbers are going up. The level of investment is going up. But if you look at it as a whole, the whole MENA region, and investments into SMEs over the MENA region, it's still a fraction of just what they invest into London. Investors are still very typically invest into things we can touch and feel. We like our real estate. That's where we made our wealth. For example, my family in construction. So getting into tech, getting into funding of startups and SMEs, they only remember the journey of their company, and they took 20 years to build and how it grew, etc. So you're now saying, here's a new investment opportunity. You can make 5x in 2 years. And they say, what is this? It's they call it, as they're saying in Arabic, it's sugar and water. Basically, it's nothing. It evaporates. So a lot more education needs to happen. Yes, it helps that we have success stories, but then that buzz will be short-lived. So people will throw a bit of money in and then look back and regret it, which shouldn't be the case. I think a lot more education needs to happen, family offices, individuals in general, about the startup and SME landscape. I think it's starting to happen, just not fast enough for the level of growth as always. So as I mentioned, UAE will grow so fast and so well, and so many people come here to fundraise, but the funding gap needs to catch up.
So I suppose what we need to see is a lot more regional institutions willing to invest, be it company groups or even insurance companies, which we haven't seen yet.
That's true. So you do have a lot of things out in Europe, and this is kind of what spurred investors to take that first step back in the day when people were really heavily investing in SMEs and tech, were in big institutions such as insurance companies going in and doing matching funding, or government matching funding. The thing is, the governments here in the region are also, it's very different. We don't have a massive tax regime like out in the West. A lot of money is invested back into the country, as you can see with the development. So there's not a huge bandwidth. So expecting government to match investment dollar for dollar, for example, into an SME is a very difficult ask. But institutions can step up and do these things. If people know, hey, E&Y has a fund, would you like to tag along? I think investors will be a lot more, or an insurance company or otherwise, will be a lot more interested and feel a lot more comfortable.
For our entrepreneurs that are watching, what are you looking for? If they want to reach out to you, what's the next step and what are you after?
The only real major thing I look at any entrepreneur, no matter what the sector is the management themselves. So investors become investors through being good judges of character, which has allowed them to make the right decisions in their business life and that allowed them to be successful. So they have an innate ability to read people and to judge everything from head to toe based on how you walk into the door, based on where you're looking when you do, based on your handshake, based on how you say things, what you're saying, where, your response and feedback to what we say. And these things are all impacted by the subtle things that an individual will do in his life. Team sports will make a difference. Have they had a lot of public speaking, for example? Do they sit a lot in social settings? Do they lock themselves in the room? Are they good people? These things, I know people think that they can put on a professional front and say, well, I might be this in my personal life, but professionally, I am who I am. It doesn't work that way. It will come straight through. Investors will immediately say, I don't like this guy. It'll be a sixth sense, and it'll filter through to their investment decision. Majority, I think 50% of all businesses are rejected in the first 30 seconds, 30 to 60 seconds. And there's a reason for that, is that it's actually probably the first 5 seconds. The way you come in the door, I've already sized you up. You don't have the conviction to do what you're going to do because it's a risk for me. And investors are always contemplating and always focusing on risk and mitigating risk. And you or the CEO or the person pitching is the biggest risk factor in this. I'm not investing in your idea. Ideas are a dime a dozen. I'm investing that you can do what you say you're going to do with my cash. And that's a scary thing. So I have to judge you as an individual, the biggest risk. What happens to you? How healthy are you? How focused you are? Are you going to make the right decisions when things get difficult in the business, which they surely will? All these kinds of questions run through. So I'd say management team is very, very critical. Even if you have 20 years of experience in the industry, if I'm not comfortable with you as an individual, I'm not going to invest.
What if you don't have that experience?
I would rather invest in somebody with 1 or 2 years experience in the industry and that drive, that ability to persevere no matter what, than somebody with 20 years who's almost given up.
But you said you have no preference in terms of industry because we've seen that VCs are more and more focused on tech. You're not only looking at tech companies.
Correct.
Do you want to tell us a little bit more about that? And why is it that the typical VC out there is only looking out for tech opportunities?
I can't speak on behalf of other VCs. I know that I can see the appeal. I invested in a couple of tech companies myself. It's great to see the revenue jump 5x quarter to quarter sometimes and have insane multiples and the amount of, as always, everybody says scalability. It also comes with an inherent amount of stress and fear. I wouldn't want to live my entire life waiting and hoping one of these guys is going to be successful. It is consistent fundraising rounds, sleepless nights for the entrepreneur and the investor. And it's taking a little bit of a gamble. I wouldn't have my portfolio 100% made of tech, and I respect those people that do because it must be very stressful. I like to support that with companies that are non-tech. And if anything, those companies have fed into the tech-based companies through referrals and leads and boots on the ground. So there is an appeal to invest into tech. It is obviously where the world's going. It's the wave of the future. The economy is shifting that direction. There is still space and need for the basic things to be done in the market, and people are starting to forget that. So I think if you do something and you do something well, no matter what it is, it will be successful. It may not be 10, 50, 100x down the line, but you're getting dividends from it from day one, and you can go to sleep at night.
Yousef, that was great. Thank you so much for your time today.
Thank you for having me.
And look forward to catching up with you again.